Hello students, so today we will discuss a previous year question that came in the accounts exam of class 11 that was held by the Assam Higher Secondary Education Council. So you see we have the question here. It came in 2024 and it carried 8 marks. So the question here is, from the following trial balance of Ashok Kumar Barua as on 31st March 2023 and the additional information, prepare a trading and profit and loss account for the year ended 31st March 2023 and a balance sheet as on that date. So this is a question from the final accounts. So before we start, I want to say certain things that while we prepare the answer of final accounts, we have to very thoroughly read the question first. We have to understand the question first. So what do we, this is a trial balance, here is the debit side and here is the credit side. And then we also have certain adjustments in the questions. So as we read the question thoroughly and we read the adjustments, so I want to tell something about the adjustment thing here, that when we have any kind of adjustments in a question of final accounts, we will always put the answer in two places. Why? Because we follow the double entry system of accounts. Okay. So what do we have in the particulars? Purchases, carriage outward, wages, office expenses. We have the amounts here. We have opening stock, carriage inward, coal and gas, discount, salaries, machinery, sundry debtors, cash in hand, bad debts, cash at bank, drawings, furniture, building, sales. So the total of all this becomes 4,88,000 rupees. Then in the credit side we have sales, bills payable, capital account, capital, discount received, sundry creditors, purchase return, bank loan and interest received. And we have the amount this side, and the total here goes 4,88,000 rupees. Then we have closing stock as on 31st March rupees 65,000 in adjustments. Then we have outstanding wages of rupees 3,000, and we have to provide depreciation on machinery, that is at the rate of 20% per annum, and on furniture 10% at the rate of 10% per annum. So we move to the answer now. So you see, this is the trading account and this is the profit and loss account. This is the debit side, this is the credit side of the account. So you see this information in the books of Ashok Kumar Barua, trading and profit and loss account as the year ended 31st March 2023. We already have this in our question. This information we have this in our question, but we have to put it very nicely in here. We have to mention the debit side and we have to mention the credit side. So what is a trading and loss account? Trading and profit and loss account. So trading account involves all the direct expenditures and the direct revenue of the business. So this account is concerned with all the operational activity of a business. So in here what do we put? Opening stock. To opening stock we have rupees 50,000. Then two purchases, because so the trading account, it is concerned with all the operational activities of the business. So purchases will come under this account only. So we have purchases 1,50,000, but then in the question we also have purchase return. So we have purchase return here. So we will have to deduct rupees 5,000 from purchases and we get 1,45,000. Then we have wages. Wages is a direct expense, so it will come in the trading and loss account. Okay, but then you see in the adjustments we have outstanding wages. Outstanding wages we will have to add here. So we added here 7,000 plus 3,000, we have 10,000. Then carriage inward is a direct expense, so we record it here. Then we have coal and gas, that is a direct expense. Okay, Don't get confused here. Some might record it in the profit and loss account, but no, coal and gas is a direct expense, so we put it in the trading and loss account, sorry, trading account. Then we put sales, buy sales in the credit side of the trading account. Sales was rupees 3 lakh, but then we have sales return. You see, we have sales return here of rupees 10,000, so we deduct that from sales and we get 2,90,000. Then we have closing stock in the adjustments. We put that here for now. Okay, so as we again remember, most of the times the credit side will always be higher in a trading account. So when we add this to amount, we get 3,55,000. So we put the same amount here, 3,55,000. Then we deduct all this amount from the 3,55,000 and we have a amount. This is 1,42,000. When we deduct all this amount from this amount, we have 1,42,000, and that is the gross profit of the business. So what do we write? To gross profit. And this amount is transferred to the profit and loss account of the business. All right. So that is why we write in the bracket transferred to profit and loss account. So now again we start our profit and loss account. So we get the gross profit from the trading account, and the gross profit is 1,42,000. So in the profit and loss account, we record all the indirect expenses and other incomes of the business. So here we have carriage outward, rupees 8,000. This is an expense of the business. Office expense, it is another indirect expense. Discount is an expenditure for the business. We have salaries, it is an expenditure of the business. We have bad debt, it is an expenditure of the business. And then we had depreciation on our adjustments. That is, on machinery we had to calculate 20% per annum. So you see we have machinery here. Machinery 65,000 rupees. So 65,000, 20% of 65,000 is 13,000 rupees. Then we have to again calculate depreciation of rupees of 10% per annum on furniture. That is, furniture is 12,000 rupees. So the depreciation amount will be 1,200. That is 10% per annum. So these are the expenses that we put on a profit and loss account. Then we have incomes on this side. So we have discount receipt 5,000 and by interest receipt we have 3,000. Again, this very often this side will always be the total of this side will always be bigger. So what do we have here? 1 lakh. Okay, 1,50,000 rupees. So we put that total in this side as well, and then we deduct from this total all these expenses. So when we deduct from 1,50,000, we deduct 8,000, 3,000, 2,000, 10,000, 3,000, 13,000 and 1,200. We are left with 1,09,800 rupees, and that becomes the net profit of the business. So this is the trading and profit and loss account of the business we have prepared from the given question. Okay, so now we move to the balance sheet. So balance sheet is prepared on a particular date. Okay, you see the difference between a balance sheet and a profit and loss account? That is, balance sheet is prepared on a particular date, but the trading and profit and loss account is prepared for the year. It is prepared for the whole the activities of the whole year, but it is prepared on a particular date. That means it shows the financial position of the business. So we have the liability side here and the asset side here. So in the liability side, always we will put the capital first. As we had in the as we had in the question, we had rupees 1 lakh as capital. So we put that in our balance sheet first. Then because in the profit and loss account we have got net profit, so we add that with our capital, and that we get this amount, that is 2,09,800 rupees. And from this amount we deduct the drawings amount, and then we get this 1,99,800 is the value of our capital on 31st March 2023. Then on the liability side we put bank loan, sundry creditors, bills payable and outstanding wages. That was in the adjustments. Okay, then in the asset side we put all the assets of the business. We have the building here, we have the machinery here, but you see from the machinery 65,000 we deduct the depreciation amount, and we, that is from 65,000 we deduct 13,000 and we get 52,000, that is placed in the amount column. Then we do the same with furniture. Then we put the assets, sundry debtors, the closing stock, cash at bank and cash in hand. We put all the amount here and we add. So this is the total balance of the balance sheet that we have prepared with the given question.